Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we're at the 2nd of May, 2023, and the time 6:45 p.m. Central Time. Well, it's going to start getting very exciting from this point forward. Today was an exciting day in itself. The market had anticipated that the Reserve Bank of Australia would sit pat again, the second time in a row, on their interest rate cycle. They didn't. They shocked the market by making a move and going up another 25 basis points and coming out very hawkish, saying inflation that they thought would fall isn't in fact falling. I wonder if that's going to be us. Remember, I've told you the low-hanging fruit has come off. Now, there are benefits that are going on. Gasoline prices are down to $2.43. They have gotten crushed just recently. You're no longer at $80 crude oil. You're sitting at 75. You're at 71 in WTI. And no, I'm not going to talk about the Biden administration buying crude because they're liars. They don't have an energy policy. Whatever they tell you is just to get you to get a vote and smile at Joe, who doesn't know what he's doing. Okay, not in energy. They have no plan. So we'll see what goes on through there. Bonds and notes got bids today in front of this Fed action. Why? Because the stock market went down and the market is scared that there's not going to be a deal on the debt ceiling. The market is scared that the Fed's going to keep raising rates. It's going to take the economy and hurt the economy. And that's what they're doing. And that caused a rush into the gold market, which is now sitting very comfortably up almost $30 for the week at 2025 levels we haven't seen. So what does the market want to own right now? Gold, Japanese yen, just for a day or so, a safety hedge. The bonds today for a safety hedge. But really, I think it's the gold market. It doesn't want to own the dollar. That's what I'm going to expect. I expect we're going to see tomorrow at 1 o'clock the announcement give us a 25 basis point hike. I think that the Fed announcement, when the Fed speaks and he clears things up, he will be talking about, first, he's going to be data dependent. Second, I hope he gets asked about the debt ceiling because the Fed might have to be the one to rescue the economy. What I expect is going to happen on May 9th when the two heads of the House of Representatives and the Senate meet with the president is everybody will meet, they'll be cordial, they won't agree. There'll be moves underfoot in both the Senate and the House to get bills passed in some crazy manners without the other party that'll fail. At the end of the day, I look for an extension to have to be made, which takes us out either into July or ideally into the end of September when the fiscal year ends, and it gives all the congressmen more press time in an important upcoming election cycle. I know it sounds funny, but we've seen this. This is not a new game. We go through this all the time, so don't panic. Don't think that the world's going to come to an end. Don't think that nobody's getting paid. Don't think that, the wives are not going to get their checks for whatever reasons. It's going to still go on. I know you think I'm nuts in saying it. Could I be wrong? I could. Okay? There's always that opportunity. Do I think I'm wrong? No. How do I know? Because I've lived through it over and over. This is how the game is played. Wish I could tell you different. So when we go to the S&P, the market is down 1.2%. Most of that loss was made today, as you know, and you can see how the market's backing off a little bit. The chart pattern, you can see the big swings that you're getting back and forth here. You're not in a trend. You have a lower low, a higher high. That is not a trend on a chart. The market is fighting a battle at the 18-day average. I hope you can see it, how the market is hung in there for three of the last, 4 days. Only, not today, but yesterday was the up day. You came right back to that number. When we take a look at Bollinger Bands, you hit the lower band for support. You just missed hitting the upper band here. We'll see if the market can do anything better with that, but it's close. And you got overbought. This is a chart that's spinning. And this is very indicative of what I'm seeing in the Dow and in the NASDAQ. Same thing here, identical type pattern. Here you are in the Dow, the same pattern, hitting lower bands, upper bands, right back in. The market that's been bearish is the Russell 2000. It's running the lower Bollinger Band. This has been the one to be short for months on end. This has not been the bull market. This has been the weakness. Every time I watch CNBC or Bloomberg and I'm hearing, I want to own those small caps, I want to puke. These people don't know what they're saying. This is the weakness in the market, not the strength. You know, eventually, even a broken clock is right twice a day. So those guys will eventually be right. But the pain has been not the place to be. When we come to the bond market, this is sideways churning. You got down, and I just said it to you, you hit the 100-day average. I think the pros took money off the table out of shorts, and I think they're flat. I think you're waiting, spinning, and waiting to see what the next move is. The same in the 5-year note. Why would you want to pick a position up outside of the Bollinger Bands or buy or sell into them? It makes no sense the way I teach charting. In the dollar index, just missed hitting that upper band, overbought market, trend up. I think that the dollar is still going to be one of these markets that cracks probably the 99 level over time here soon. I'm waiting for the setup. And I admit, it could get a little nuts in front of the debt ceiling. Not only do you have the Fed, the jobs data, but that Tuesday meeting is one that I've got my eyes on. It's a week from today. In the eurocurrency, while the trend is down, the bias is up. You don't see that you're fighting a battle at the 18-day average. That's all you're doing. But why would you go into the market until you get these two central banks out of the way, both us and the European Central Bank, then approach the market? I don't understand traders' thinking half the time. I guess I've lost enough over the years doing all the wrong things where to me it becomes just crystal clear. You stand back and you wait. In the British pound, when you got up to the Bollinger Bands this recently, out of the past 5 days, 3 times or so, you got to come out. That is the resistance. What are the odds of staying over that black band? What are the odds? 5% of the time, which means 95% of the time it's going to stay within the bands. Now, the longer it goes sideways, it does break out. It will break out. This is like a spring, and you're winding it up inside of a pipe, and eventually it tightens up, and it will break out one way or the other. That's the play that you're looking to catch. You're not anticipating. Go after the fact. In Bitcoin, you're still in a market that has got downside bias, trend down, resistance 29,182. Get back over that high and you negate this small downtrend. Is there enough momentum here to carry to 27,000? Don't know. Why? Because the market likes to get a bid in this as the stock market has been slipping to a degree. But remember, it ties itself in funny ways to the NASDAQ at times. When we take a look at Brent versus WTI oil, the July contracts, you see the difference. You've come down and down hard. Why? Because the markets are scared that central bankers around the world are and I'm talking the major developed countries, are raising rates to slow down their economies, which in turn slows down the demand for these energy markets. You can see that right through here as to what's going on. You know, if we slow down, we don't order products from abroad. They use the energy to make products to export to Europe, to America, and you don't need them right now. And that's what's going down right through here. Gasoline, you're only May 2nd. The kids are still in school. The driving season has not begun. The market's got a headwind here. It's fought a battle at the 200, the 100-day average. It fell to it, fought for support against it, and lost that. Came down, back up, and failing. You can keep failing here. You've got to get people to throw in the towel. Do you know how many people were buying on this break saying, there's my better opportunity? They don't understand trends. My own subscribers, I would write them. They're going, can I buy it here? I'm going, no, that's not my method. All right? You've stepped out of the uptrend when you broke this low right here. And if you look back at it, that was a pretty good piece of advice. In the nat gas, you're caught in no man's land until we get warm. How many times have you heard me say recently, the market's waiting for the hot weather? Well, next week in the Midwest, That low front is moving out. We're going back into the 70s, and the week after, the projections are already the 80s. So the heat is starting to come. 80 isn't hot, but it starts the need for some air conditioning in a number of areas. Right now, you're in that ideal area. At nighttime, you're in the 40s and 50s. Daytime, you're near 60s. You're not using a heck of a lot of energy one way or the other. So you put it together, you come up with a plan, and that's what tomorrow's going to be. Tomorrow, and let me tell you how I work. Monday through Thursday, I write 2 market letters a day. One at approximately, I publish at about 11:30 to 12 a.m. Central Time, and the other one before 8 p.m. at night, Central. In it, I give you trade ideas. Some of the reports are longer than others. They're full of charts, graphics, giving you ideas and pointing you out. The meat is included in the videos in the morning. The two tie together. They're very important. Traders that just take the morning video put themselves at a disadvantage because I issue updates at times during the day. They don't get that. They only get the morning video. The full package is where you get everything. And I do react. I adjust orders. I try to come in on markets. I stay away from certain markets at certain times. You can get me in a financial market right now, but what's wrong with trading in the grain markets, all right? Nothing wrong there. And that's what we've been attacking. Will we move right back, or will I move right back into the financial markets? You can count on it. It won't be tomorrow, though. So I look at these, come up with the game plan, and I want to show you. You see the word free trial? Let me give it to you. You move your cursor up here for free offers. You'll see it. Give a click. You can go to our website for free offers. There's one caveat. If you've had a free offer, I'm not going to keep giving it. Don't think you can keep coming back at me and getting the free offer. It's not going to work that way. We'll catch it, and we will stop you and bar you from anything on our website. You don't want to do that. You want to do this and be fair. If you don't want it, just don't sign up for it. It's that simple. But I think you'll find it's interesting, and I put my heart and soul in it. So if you want to join us in the morning in the subscriber video, if you're watching on YouTube, there's a Join Me button on the bottom. Just give that a click. It's in blue. You'll be able to do it from there as well. I'm Ira Epstein. You have a great evening. I will talk to you all tomorrow.